Okay, just an update, August 13th, 3:47 p.m. I want to say to the members, check out the new bond desk. It's going to be really helpful for those of you who trade relative value bonds. Okay, so what you can see here is the outright P&L. You can see here the actual yield curve, and then you see the relationship between the 2s and 10s, the 3-month and the 10-year. So this is the SR3, or the SOFR, which is secured overnight financing rate, versus the 10-year. These are posting because these are trade opportunities on the spread. And then, of course, the 5 versus the 30-year, which is actually the 20-year. This is the FOB. It's the ZF against the ZB. And then over here on the bond desk, we traded this today and we're making money. It's the what this is the top pick throughout the entire yield curve. Well, not the entire, but going from the 3-month all the way to the 30-year. Again, really the 20-year. And then for your ratio, so you can see here, this is the ladder. You can see what's cheap, what's rich. You can bounce it against this. This is the yield curve. So as you can see, over the past year, we busted out of that finally, and busted out of that inverted yield curve and turned into a normalized yield curve, which looks like it could steepen. Yeah. Well, you'll get an invitation here to a training because I know quite a few of you are interested in spread trading or adding spread trading or doing more spread trading, and this is just such a helpful tool because you can see everything. You can see what's cheap and expensive. We'll show you the techniques that we've used. I mean, we've used this for over 15 years, a similar methodology, but basically this is a very professional way of approaching it. This is the interest rate regime. Oh, and the reason we don't put the UB, which is the true 30-year, the ultra 30-year, is because it's just not enough liquidity. So anyway, so that's that. We're going to go over this. Look out for some new videos on this one. And then if you want to double check your ratios, you can check this, and this will take you to the CME website where you can. So on that note, let's take a look at desk. Beautiful day. By the way, yesterday I wasn't even in the office, but yesterday was not a good day. I was actually bummed out that I wasn't here to show you, because we got to show you our warts too, right? But yesterday we had 4 stop losses and only 2 take profits, and if you didn't take either one of the losers, you'd have been down, but you would only have been down about $100 for the day after taking all the VRB trades. Now today, different story, isn't it? On the long side, hit the 5-to-1 on the ES, the S&P 500. On the NASDAQ, hit the 1,095 target. I don't remember if we got stopped out on one of these, but even if for their traders who hit the 1095 target, they might have got stopped out one time. So maybe this was a little under $800 on this trade. Look at this Dow. Anyway, it hit a 5-to-1 on both the long and the short. Look at that, beautiful, beautiful. Just $56 stop loss on that. So that was it, $56 risk. This was pretty tight too. So that's it, guys. I just wanted to remind you, especially the members, check out bonds, check it out. And then also over here under alerts and decisions, this is a new module, right? The numbers. The last signal was at 310. That was a winner. What was it? It was the VRB. It has everything. Think of it as kind of like the sibling of Fit Engine. So you have cycle bias. All the numbers are here. VWAP's here. VWAP aligned? No. Standard deviation, Z-scores. You can see where we are right here and find your key numbers. There's implied volatility. There's the gap in variance risk premium. So that's the gap between realized volatility and implied volatility. Is VRP elevated? No. So that's a nice place to go to before you finally pull the trigger over here in desk or on your DOM and decide, yeah, I'm going to take that trade. So that's it for now. Hope you made money today.